Today, is cash to reign supreme in 2025? Hello again, it's Martin North from Digital Finance Analysis, World Notice Post covering finance and property news. In the second part of our Twix-Mass series, we look at the use and future of cash. To the surprise of many, banks included, the use of cash is on the rise, and now the government is looking to secure its use and availability across the country. Assistant Treasurer Stephen Jones told ABC News that we wanted to ensure all Australians, 1.5 million Australians who prefer to use cash, to be able to do that. According to the Reserve Bank of Australia in 2007, 69% of Australians said they would use cash to transact. By 2014, this had fallen to 47%, and by 2019, it had dropped to 27%. And by 2022, only 13% said that they would use cash, but that, of course, was distorted by the COVID era, during which some claimed falsely that notes spread COVID, which, by the way, was convenient for those seeking to take cash out of the system. Even the RBA said the latest consumer payments survey that showed 13% of transactions are cash was affected by COVID. And the RBA will be updating its consumer payments survey in 2025 and releasing that information publicly in 2026. So we'll have to see what that trend says. However, all of this masks an important point. The volume of total transactions has gone through the roof in recent years, partly thanks to tap and go, making atomized payments easier. It's actually funny how the RBA and the banks continue to focus on percentages, not transaction volumes. What have they got to hide? Yet, even the Reserve Bank has noted that there are more than 2 billion banknotes on issue. That's worth more than $100 billion, which is about $4,000 a person in Australia. So cash is certainly not dead. Cash Welcome founder Jason Bryce said that people want access to physical currency, and he's calling on banks to respond to consumer demand. He points out that cash withdrawals have remained steady despite banks dismantling half of their cash distribution network. While there are fewer bank branches and ATMs, there's still almost $9 billion worth of cash withdrawals from an ATM every single month. If the latest withdrawals and cash in circulation data is any indication, the next consumer payments survey will show a turnaround and perhaps silence some of the most outlandish cashless society propagandists, he said. There's been 1 million ATM withdrawals made in Australia every day over the past 2 years. And this is despite data from payment regulator APRA and the Australian Payments Network showing that the number of bank-owned branches and bank-owned ATMs has more than halved in 7 years to the 30th of June 24, from 19,508 to 8,836. Now, true, current RBA data does show that older survey participants were the highest cash users, with 18% of respondents aged 65 and over classified as high cash users. By contrast, only 3% of those under the age of 50 were high cash users. About 82% were low cash users, but low cash users doesn't mean no cash users. And the latest trend among younger Australians is also to use cash more as a means to control spending and to push for discounts, both perhaps a symptom of the current financial pressures many are feeling. Stephen Jones says there's also a stronger preference for cash in regional Australia, where telecommunications networks aren't as good as they are within the cities. That is a very good point, and it's one we see in our surveys. We want to ensure that we have banking inclusion, that we have financial inclusion, and that those communities who feel strongly about using cash aren't excluded from the economy, he said. Another point to consider is resilience. When a CrowdStrike update caused millions of Microsoft systems to crash around the world in July 2024, many started questioning our heavy reliance on digital banking. Daily life was disrupted. Businesses and governments couldn't accept cash as an alternative payment system, had to shut down entirely. Airlines, airports, banks, hospitals, and retailers came to a standstill worldwide. The systems outage, as many pro-cash campaigners have argued, underlines the risk of moving to a completely cashless world. Again, Assistant Treasurer Stephen Jones agrees that cash provides an essential fallback when digital payments break down. Sometimes systems go down. Sometimes electronic payment systems don't work, he says. And in fact, over the last few years, we've had a number of significant failures in our banking system in Australia, separate from CrowdStrike. We've all been standing in a queue at a supermarket or a shop somewhere, and they say that the EFTPOS or the payment system has gone down, the power's out. We want to ensure that doesn't happen, that doesn't become a crippling event right across the country, he said. And the Assistant Treasurer says that that's a big part of why, in November, the federal government mandated cash for essential purchases such as groceries and fuel. The Treasury has already started consulting on which businesses supplying essential goods and services should be covered by the mandate. Mr. Jones says Treasury is considering carving out small businesses with an annual turnover of less than $10 million. But actually, for many, cash is becoming cheaper as banks ramp up merchants' fees. In fact, the RBA estimates that Australians have been losing about $1 billion in surcharges a year, and has said its payment system review will closely examine card surcharges where retailers pass on to consumers the costs at the point of sale. The cost of the convenience of being able to tap and go has certainly risen, and the Albanese government has said that it is prepared to ban surcharges for using a debit card from 2026, pending the findings of the RBA review. Mr. Jones says the RBA is looking at options to ensure that surcharges don't fall on small businesses. Currently, sometimes small businesses get charged a $2 merchant fee when the bank has paid only a few cents for the service, and it's not fair to pass on that inflated cost to small businesses. Final details of the mandate will be announced later in 2025 and is expected to take effect from January the 1st, 2026. Incidentally, RBA data shows that card payments, especially debit cards, have continued to soar, becoming the dominant form of payment in Australia. In 2007, 26% of Australians used debit or credit cards to transact. By 2022, card payments accounted for 76% of all payments in Australia. Debit cards now account for half of all payments, but as before, convenience begets usage, and we're all talking percentages here, not absolute numbers of transactions. The federal government's threat to ban excessive debit card surcharges by 2026 has been welcomed by customers and small businesses who have been hit with higher costs for years, but not everyone is on board. Big Four bank Westpac has called for an unwinding of the blended pricing structures that push retailers to impose surcharges on everyday debit card users who wear the cost of paying for airline points and other benefits promoted by credit card schemes. The Assistant Treasurer told ABC News he thinks that the model suggested by Westpac makes sense, and the RBA review could recommend separating surcharges so debit cards attract no fees. Recalling that banks have been arguing the costs of providing cash services is substantial and they want to unbundle those costs, despite, in my view, they are a cost of the bank doing business, the question of whether users will one day have to pay for the benefit of using cash may sound far-fetched, but it's one the RBA Governor, Michelle Bullock, contemplated this past year. That's nuts in my mind. This cost of cash question actually came into focus this year as Australia's last remaining cash transport company, Armaguard, has repeatedly talked of how the company is struggling to stay afloat. After threatening to stop transporting cash, the company got a $50 million bailout from its 8 largest customers, including banks. It's also uncertain whether cash will still be readily available at retail stores if the companies that transport it threatens to halt taking cash to the bank. And whilst there has long been talk of whether we are heading for a cashless world, with the former coalition government proposing, of course, to ban cash transactions over $10,000, ostensibly to reduce the black economy, that controversial bill was abandoned. And actually, in the current uncertain times, more households are keeping a reserve of cash for emergency use, as well as using cash more day to day. And interestingly, because of banks surcharging, some retailers are now happy to offer discounts for cash transactions as digital payments cost them more. And of course, cash is anonymous and the transaction data cannot be tracked and recorded. So from a privacy and security point of view, cash wins out. And my final point is this. The Albanese government has confirmed that cheques will stop being issued by the 30th of June 2028 and will stop being accepted on September the 30th, 2029. Now, the Assistant Treasurer says things are being worked through because there are businesses, including the legal and real estate industries, that still need cheques. He notes that cheque use has dropped 90% in the last 10 years, and many banks and financial institutions are ending cheque issuance for new customers. There are lots of areas where cheques remain a means of exchange or a backup means of exchange, which is why we're given plenty of notice, 3 years' notice of the phase-out period. Jones said, "We didn't want to see ourselves in a situation where the banks unilaterally withdraw cheque services, which left all of those businesses and industries who relied on them high and dry." So don't be fooled by the banking sector and lobbyists who claim that we are going cashless. The truth is very different, and unlike cheques, cash is here to stay, so use it or lose it. And incidentally, use of cash has already been mandated in New York and many Scandinavian countries, the latter some of the first to champion digital payments, and elsewhere too. And why the reversal? Well, it's simple. Cash is cheaper, more secure, private, and resilient, especially in a time of digital disruption. And a final thought, teaching kids the true value of money is much easier with real cash. I had a chat with parents last week. He realized their kids had no feel for the value of things as they watched tap and go in play without consequences. Giving them real cash teaches them the finite value of money, a life lesson well learnt, and one which many older Australians would do well to learn also. Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.